All right, traders, welcome to today's end of day recap. This is Christian from Tribeca Trade Group, and this is Wednesday, February 22nd. We had a really late report. I'm not sure what the delay was for NVIDIA, but they are out on the tape, and hence I've started the end of day market recap. So we'll get into NVIDIA results in just a second. We'll maybe go over a couple of the other names too. But themes of the day, of course, the big macro event for the day was the Fed minutes. I will give you my opinion on those. My opinion, risk disclaimer, let me give you the risk disclaimer. Risk disclaimer, everything that we're going through is for information purposes, only not giving out any advice or recommendations. So what I noticed today was that, price action was kind of building a little bit towards that 2 o'clock event. Today's not a Fed day. It was just the Fed meeting minutes from the last meeting, and I think they kind of throw in like some updates in there too, but I'm not 100% sure on that. I just kind of heard that that's what they do nowadays. But nevertheless, I don't think that we really got anything new. They seem very continued to get the job done in terms of what they need to do in terms of raising interest rates to combat inflation. Here's what we have here in turn. The overall interest rates, I think, are really playing a big role. I was on Benzinga just about an hour ago, a little more than an hour ago at this point, just going over that and how much the higher interest rates are influencing what's going on in the market. And I don't just mean what we're looking at. What we're looking at is Fed fund futures. This is what the Fed sets in terms of the overnight interest rate. We're sitting here and 4.37 is what we're looking at. This is now, so this has been moving, and I don't want to say like it was today that's moved it, because basically it's been just inching up just about every day for the last week or so. We're at 30 basis points for the next Fed meeting, which is on March 22nd. So that's been moving. This is the first time I've seen it 30. It's been around a little bit north of 25, but it's mainly been between 25 and 30. Regardless, it's still closer to 25 basis points. Again, this is what Fed fund futures are pricing in. This is what the market is pricing in. And then, of course, if you look out, there's another 25 basis points being priced in for May. And then there's another one for June 14th meeting. And then that's basically it. Notice the high rate here, the highest the rate gets to, what Fed fund futures are currently implying is 5.37. Okay, just to give you an update on that. But again, you could look at the overall yield curve, and this has been going up across the board. Today, not so much. Yields were down a little bit, right? So finally, if you look at the 2-year, which has just been blistering higher, that's, you've got an inverted yield curve. Here's what this looks like, right? Big move since the end of January, beginning of February. So, again, if you don't think that this is impacting what's going on in equities, look at the time. We could put up a chart side by side if you like, but the market has been, it stopped its momentum to the upside, or lost its momentum to the upside since rates started to build and move higher, and really since they've been kind of moving to this last leg higher. You can obviously see, right? I mean, here is where we are, right? So here was, whoops, wait for this to adjust here for a minute. Here was the 2nd of February, and you could see, trending a little bit lower, and then finally just giving way. And for now, yes, the 80% rule is in effect, just like we talked about in yesterday's video. Yes, that means that there's an 80% chance that we do go all the way to the bottom of value. However, we're running out of days, right? So this just triggered the 80% rule. And we only have, I think now 4 more days of February. Today's over with, so Thursday, Friday, and then Monday and Tuesday. So that kind of makes it, you have to use a little bit of common sense with these rules. If it was the beginning of the month, I would say, hey, there's a, the 80% chance I would be playing that. Here, I'm not so sure. We also have this big thing in here called the 200 moving average, which is kind of, for now, acting as a bit of a speed bump. I didn't see a big reversal for today. I started to say, you know, if you look at the price action for the day, you know, we were kind of building, and my opinion is that sometimes you can see, you know, no doubt, like yesterday's price action, the shorts were in control, right? Or sellers, if you don't want to call them shorts, you could say the sellers were in control of yesterday's tape, right? Today, it could be that, you know, they were kind of, they took off their foot. They took their, let me say that again. They took their foot off the accelerator today, right? No one wants to, you know, regardless if your strategies, you know, that you're executing is long or short, on a day like this, you know, when you have an event, traders don't really want to, you know, make a big commitment. Now, once they have the news, right, and you know, I don't think that there was any new news that came out today. You could see that the sellers try to reinforce themselves, you know, try to reassert themselves once that news came out. So that's my opinion of what's happened for the day. You could see we're right kind of in the middle of this. One other observation too that I thought was interesting with the S&P down on the day, and it wasn't much. SPY was down. I mean, this is kind of splitting hairs. It was only down 15 basis points. By the way, someone asked me on Twitter for a downside level on SPY and not S&P futures. This is 388 to the downside, right? And to the upside, it's 404. Right. Interesting that the 50-day moving average and 200-day moving average are a little bit different here, right? We talked about that yesterday in yesterday's video, how the volume profiles are a little bit different, right? Also, the 200-day moving average is a little bit different, right? Because there's much different volume and price action that can occur between the products of SPY and S&P futures, even though they track the exact same things, they're the exact same underlying, but one trades more continuously, you know, almost 24 hours. All right, so here's what we have. You know, one of the things that I said in my midday video, you know, this was around 12:30 today, was that, you know, if bulls want to, I mentioned about the sellers reasserting themselves. If the bulls want to reassert themselves, right, they really need to kind of get over this virgin point of control takeout, right? And if you note for Qs, show you this as well, right? Qs are trying to turn the corner, and again, it amazes me that there's still a decent amount of you know, or just better strength. Like, for example, the Qs finished positive for the day, right? And they are higher valuation, and they're kind of I don't want to say overcoming the move in interest rates, but they are continuing to outperform as we started to see in the beginning of the year. So again, it's a little bit of a head scratcher to see interest rates go higher, and you would think cheaper things would be doing better, but they're actually you know, they're actually not in terms of the performance. For example, like Tesla was strong today, right? That's not a cheap company, right? And if you look at the movers today in the Qs, just to see what was moving, now Palo Alto helped, right? That was up 12.5%. That moved things like CrowdStrike and Zscaler that's on the list. SGN continues to move higher, but you know, if you go back to our list here, right, you know, that helped software today. Software was up 1%. Biotech, which doesn't get influenced, not really going to be influenced by Palo Alto, but biotech was up again 1%. I learned my lesson with biotech for now. After this swoosh down that we had and kind of false, you know, real nice move, and then you know, completely moved the other way. So I'll be watching this biotech a little bit from the sidelines. You know, again, I don't think today, even though it led today, wasn't enough to kind of change the trend here, but we went over biotech in yesterday's video. So Nvidia, you know, I want to talk about a couple things. If this market could stabilize, in my view, by the way, for the week for the macro events, I think the PCE deflator, which is out on Friday, is going to be the real thing that kind of comes out. That's new, fresh information that can move the markets. Again, that is another gauge of inflation. It's a gauge of inflation that the Fed looks at. I know that most people look at the CPI. The Fed, of course, looks at the CPI too, but the PCE deflator gives another read of inflation, and that's a couple weeks past the last data points that we had with the PPI and the CPI. So they are looking for a similar reading on the CPI, which is 0.5, and you know, this could be pivotal on Friday. You know, if if this comes in a little bit better than expected, you know, maybe 0.2, 0.3, I think the market rallies off of that, right? And I think interest rates go down a bit, right? And probably that'll be the first reaction. And if it goes the other way, then maybe we do see the 80% rule complete. If this number comes in really hot, the market's going to sell off and yields are going to climb. Again, I'm just thinking logically about what could take place there. So that's kind of the macro summary. You know, what am I watching in terms of names? You know, I think this is good to see NVIDIA up like this. You could see I've got some resistance here for the week at 227. And for the really for the bigger, you know, the Thinkorswim doesn't update the weekly and the daily charts with the after hours price action, but really 219.26 is going to be the level to watch, right? That'll be big to see if that can close above 219.26. Now, I don't think their earnings call started yet, but that's a very nice price action, you know, to see that back. Again, hasn't taken out the highs from last week, but it's encouraging. So it's funny because I've been looking at a lot of these names. I talked about, I didn't go long this name, but you know, I really like this move back. This is analog devices. Remember, you know, some of these earnings reports people have forgotten about, but analog devices had a real big earnings gap. Well, it's filled the whole earnings gap. So you get a chance to kind of get involved in this right back to where it was. Another one, I keep saying Lam Research, but it's Lattice Semiconductors, same thing, right back to where it was. So I think that there's a lot of opportunities like this. I went long, you know, a couple small things today. I went Cadence. I've been having a love-hate relationship with recently, but it's the same type of setup, right? Here's the earnings gap, pushed higher, kind of came back into here, and I bought this the other day. And it kind of failed here. I took it off, and you know, I do this with trades, right? I mean, sometimes you get paper cuts like this, but if, you know, because you don't know, you know, things, if once they lose the 5-period moving average, you could see a push down to the 20. I went over this in a recent video as well, but for now it's hanging in there. So that's one name. Another name that I went long today was, again, kind of sticking with some of these names that had really good earnings, but are pushing back. IRDM is another one, right? And, you know, there's a whole list of these things, right? You know, and I think that if this market can kind of hang in here, you know, I think that the setups are developing, right? And you're going to see a bunch of people. All we need, but what'll happen is all you need is one solid green day, and people are going to come out and go, oh my God, all these setups, right? So I think if you do your research now, as we're doing, and that's what we do at Tribeca Trade Group, is try to do that research for traders so that you have an idea of where setups are, and then if the market cooperates, you can begin to kind of put those names into action. And you know, at least that's what I'll be doing. And for now, it's just kind of a game of patience, you know, trying to participate in some things, but trying not to like really get frustrated with this market too. You know, I put on a Tesla trade like in the first, you know, after about 20 minutes after a half hour, and it just immediately, you know, started to break inside the value area and then fell apart. Now look at it go. I mean, this is another chart that does not look bad to me. It's still underneath the 200-day moving average, but again, you have a catalyst for Tesla coming on the 3rd. So I think it holds in there. I don't know, you know, a lot of times these events, investor days, are buy the news, buy the rumor, sell the news. So I would be very aware of that. But I continue to kind of look for opportunities in Tesla prior to that number, because I just know that that's how the market works a lot of times. And if it were to break up to 223, I would be a seller up there, regardless of you know, the event or so forth. But you know, so anyway, that's another name to watch, and I'll have some other names to watch for members out a little bit later this evening. Guys, have a great night. See you tomorrow.